Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 21st, 2011. Now, just to clarify here, we're getting into very low volume, thin markets. The trading for the month is for the year, I should say, is largely coming to an end. What we're seeing now in the currency markets, the futures markets, is very low volume, thin trade, prices moving around very quickly. The S&P 500 and crude oil moving up aggressively today on virtually nothing. And this is what is normal to see at this time of year. So I've advised basically my own clients that we're pretty much done for the year. We've had a very good year, and we're not really looking to trade very aggressively for the remainder of 2011, because it's not going to be a true price. It's going to be a false price. Now, for a potential recommended trade here going forward, looking at things for tomorrow and the remainder of the week, I look at crude oil. We're coming up against the Vantage Point key resistance level just above this 97.10 area. We've closed at 97.22. This entire move is happened in one day based on a little bit of better housing data out of the US, which certainly is not enough for, in my opinion, a trend reversal or to fix all the other problems in the global economies. Or more importantly, is that going to cause increased demand for light sweet crude oil? The answer, of course, would be no. So basically the retail position traders have pushed it up higher. This represents an opportunity for us to short. So looking at this trade again, we can see we're still not in oversold territory at all. Even though we've had this bounce higher, we're stalling basically between 97 and 98. So we're going to go in, have a look at the Vantage Point daily report and see what it looks like for tomorrow. So for tomorrow, we've had a number of down days, 4 straight days in a row down. The neural index is up. So in a move towards this 98.04, we're going to use that to set short positions. In my opinion, we should have our stops just over the $100 mark, and our target would be back down 96 or potentially even back to that critical 93.50 level. But I don't think we're looking at a complete trend reversal in light sweet crude. My view is going into 2012, we're definitely going in based on demand, the fundamentals, the global economy. Crude oil is likely to settle below $90 a barrel. That's what I would look for. So for tomorrow, again, high risk trade, trading at this particular time of year when the bigger players are out of the market, very, very high risk, just to point that out. But that doesn't mean that there may be some opportunity, in lighter volume to get a better price on our shorts. Now, that's our first position for tonight. Our second position is going to be in the dollar-yen currency pair. Again, I'm looking for places where I'm not going to see a lot of volatility, and we've got the potential for a good move going into 2012. Dollar yen is certainly a place where I think we have that. I believe that the yen in general is grossly overvalued as a currency, and that likely is to reverse in 2012 when things look a lot better in the US. The US equity markets, the US dollar, everything is looking a lot better, and it's not looking so great in emerging markets or anywhere over there in Japan. So I like the dollar yen long trade. I'm going to stick with it. Key level 77.75. We've closed at 77.86. Most of the indicators are sitting flat, but I like the predicted short, medium, and long-term differences sitting at the zero line at trend-ready levels. Now, when we look at this again, where it's more about kind of positioning ourselves for 2012, because again, the 2011 calendar year is pretty much finished last week, guys, in my respectful opinion. This week here, we're going to see wild price swings that make little sense. But again, the dollar yen is good value. I would be looking into the first quarter of 2012. I would be targeting somewhere between 80 and 85 on this level. So buying down at these lower levels in the mid 77 area, very, very attractive to me at the present time. Now, looking at for tomorrow, we have 77.59, 78.20. That's the range for the day traders, and your medium and longer term traders can look at what I'm suggesting into 2012 in a much bigger move towards the very least back towards that 80 level. As you know, post intervention, we're holding above the Vantage Point key level. We've got a couple of little candles dipping below, but again, we still look at trend ready levels. So with that said, I want to wish everybody a very happy holiday and a good new year. And I look forward to talking with everybody again in 2012.